Hi traders, this is Matthew from Zen and the Art of Trading. Today's video is all about my ultimate pullback indicator. So this is not a trading lesson or even a Pine scripting lesson. This is just a tutorial video to show people how to use the settings on the new version of my ultimate pullback indicator. If you're not sure what this is, there's a link in the video description that goes into great detail explaining what this script does. But basically, this is a trading tool that I designed to use in my own trading. It's based on the pullback strategy that Stephen Hart from the Trading Channel teaches. I'll have a link to his material in the video description as well. But this script is designed to help me backtest and manage my pullback strategy trades. So if I turn off this strategy script for a second, you'll see that it is detecting pullback setups in the markets below this EMA. And there's a whole bunch of different candlestick patterns that I can use to detect these pullbacks. I use engulfing candles by default, but there are a bunch more here that you can use if you want to. And basically what this script does is it sends me alerts whenever a valid pullback setup is detected. It draws my stop loss to the chart. So you can see here, this was a 24.1 pip stop loss from the entry of this engulfing candle. And it draws my profit target. So this particular trade would have made 36.99 pips, which is a 1.53 risk reward trade. It also tells me how many bars I was in the trade for and what my max adverse excursion was. So this trade went 90% towards my stop loss before it hit my target. So these are valuable metrics to track in your backtesting process. It also detects exit reasons for me. So there's a whole bunch of exit reasons here. Now I'm not going to go over all of these right now because I'll go over these throughout the video. But for example, if I wanted to, I could tick this use ATR trailing stop. And then this script will begin trailing my stop loss until it gets hit, which it did down here. And whenever this ATR trailing stop changes, I get an alert sent to my phone so I know I need to manage this trade. And so this script is a backtesting tool, a trade management tool, a strategy testing tool. It helps me see at a glance whether or not the script is profitable on a market. So here we had 104 trades taken. We only had a 41% win rate, but we had an average risk reward of 2 to 1 and a break-even rate of 37.5%, which means that 78% of my trades closed for a non-loss, so either a win or a break-even. And this profit zone means that given this risk-reward profile, I need to win at least 33.29% of my trades. And this script, as you can see, won 41% of the trades over the past 104 trades. And so it is profitable. And the backtesting script here confirms that. So I use this information to decide which markets to go back and manually backtest. I do not depend on this information to trade blindly, and I strongly encourage that you don't either. These signals are not intended to be traded blindly. For example, I actually would not have taken this trade here because it's not the swing high of the pullback. But as you'll see as we go over this throughout the video, the script is not 100% accurate in detecting the pullback setups, according to my personal strategy rules, because computers are pretty stupid and they do not know how to read a market as well as a human does. They're not good at reading trend and structure, especially not PineScript, which is a very simple programming language. But as we go throughout this video, this tutorial video, I'll be showing you what all these different various settings do, and you can use these to customize the script to your liking, which will affect your win rate and your risk reward profile. And so you can come here and mess around with these settings and see how that affects your win rate and risk reward until you're comfortable with it. And then you can go and manually test each currency pair with the settings you have to see how it performs and if you like the risk reward setup. So this particular currency pair with the settings I did this backtest on wasn't profitable enough for me to go and trade, even though it did have an average risk reward of 1.84. But by going back and manually backtesting this and crunching the numbers, seeing the stats, I know that I don't want to trade this because it does not make enough money for me. Backtesting all of these trades took me about 45 minutes with the script, given how easy it was to get my stop loss size and my targets. And so it dramatically speeds up the backtesting process. But even though this market and this time frame was not profitable, I do have a whole list of markets that this strategy is profitable on. So here is my optimized 4-hour trading strategy. It had a 163% return over 172 trades with a 63% win rate and a max drawdown of 8%. But of course, that is including several market filters and my own personal strategy rules, which paying subscribers get access to when they sign up to get this script. And so before we begin this tutorial, I do want to mention that this is not a free indicator. This indicator took hundreds of hours of development over the past couple of years to get it to where it is. And it's a constant work in progress. I'm always improving it. And given how many questions I get about it, I just can't manage it for free. And so it is a monthly fee to access this indicator. You can sign up for a trial on my website. I have a link in the video description. But for those who pay for this script, you get access to the script for as long as you're subscribed. And you also get access to my personal spreadsheet, my backtesting spreadsheet that you see here. You get a copy of this. And you also get video lessons on my personal strategy rules, how I use this indicator to trade the markets profitably. And you also get a PDF with those rules written down. They're very simple rules. It all fits on a single page. So if you like simple systematic trading and you like trading pullbacks, or you're a student of Stephen Hart's EAP program, then you're going to love this script. I have found it extremely helpful and time-saving in my own trading process. I use it literally every day. I couldn't live without it after using it for so long now. And without further ado, let's get into the settings tutorial. All right, so when you load the Ultimate Pullback Indicator script onto your chart, this is the default view that you'll get. So before I open the settings menu and start running you through the settings, I'll just explain what you're looking at here. So up here on the top right, we have our label, which is telling you your total trades that the script has taken, which is based on all of these signals you see on your chart. It's showing you the win percentage, so how many of these trades hit targets versus how many lost. And then if you hover your mouse over this label, you'll see another little label, tooltip label appear above it, which tells you how many trades won, how many trades lost, and what your average risk-reward ratio was across all of those trades. And before I continue, I just want to point out that I did make some modifications to this script while recording this video. And as you can see here, this label is now turned green. What this means is that whatever settings I've set this script to are profitable. So if I hover my mouse over this label, you'll see a bunch of stats there. And so first we have our wins, losses, and break-even trades. So this is our total wins, total losses, total break-even. Here's our average risk reward. Here's our break-even rate. So how many trades were closed out for break-even. This is how many trades either won or was stopped out for break-even. And this is our profit zone. So anything that exceeds a 35.75 win rate is profitable, given our average risk reward. So with a 1.79 average risk reward, we need to win at least 35.75% of our trades in order to make money. And over the past 116 trades, we had a 44.82% win rate with the settings that I've set this up to. Now, before I continue, I should stress the point that this is a ballpark figure. It's not 100% accurate because it does not account for the spread, slippage, market volatility, such as a candle hitting your target and then stopping you out on the same trade, little things like that. So I would treat this label, this color, and all of these statistics here as just a rough guide in order to inform your backtesting decisions. So for example, given the statistics on this currency pair with these settings on this time frame, it is worth my time to go back and backtest this manually. If, however, I go to a different currency pair and this label turns red, such as here on euro dollar, that means that this is not, the settings that I have this set up to are not worth my time backtesting manually because they're not even close to profitable. We need a 35.6% minimum win rate in order to make money on the script settings that I have set up here. And we only have a 32% win rate over the past 150 trades. So given the way this script is set up on this time frame, on this currency pair, this would not be profitable. And so I wouldn't bother backtesting this pair with the settings I have set up here. And one last thing I want to stress before you go out and use this script to trade with is that these signals are not intended to be traded blindly. I highly encourage you to come up with market filters, such as reading trend. So for example, this pullback here, you might not want to take this given the fact that the pullback occurred from a major level of support. So maybe you would not take this trade given that the market just responded from a major level of support. And of course, sometimes the script is going to detect pullback signals within consolidation like we see here. And so personally in my own trading, I wouldn't trade any of these signals that occur in here. But it's really difficult for me to make the script know when the market is in consolidation. If it were easy to do that, then I'd just be an algorithmic trader and I wouldn't even bother manually trading. But there is always a degree of subjectivity in trading. And so this script is intended to be a tool to help you with your backtesting and trade management process. It's not intended to do all the heavy lifting for you. I still strongly encourage you to get creative and develop some market filters to filter out certain trades. But this can still give you a pretty good idea of what markets are worth your time trading. I have no doubt that with the current way this script is set up, on this New Zealand dollar against the yen on this 1 hour chart, if I were to add a few market filters to this, such as not taking trades around structure or in consolidation, I reckon I could get this win rate up closer to 50%, which would be phenomenal if I can keep the risk reward above 1-to-1. That could be the makings of a very profitable strategy. But anyway, let's continue with the tutorial. So by default, the script is set to a 1-to-1 risk reward. So if I throw on a long position here on this signal here, we bring our stop loss up to this red line, which is our stop loss, and our target down to this green line, which is our profit target. You can see we have about a 1-to-1 risk reward here. So all of these signals on the chart are 1-to-1 profile trades. And so that brings me to the next point, which is our labels. So every time a setup is detected, such as this long pullback setup here, we get a green arrow beneath it, signaling a long trade. Our red line is our stop loss, our green line is our profit target, and this little label down here is our stop loss size in pips. So if I measure out from the close of this candle down to our stop loss, you can see we have about a 50.1 pip stop loss. And if I hover my mouse over that label, it'll tell me the exact price of my stop loss and my take profit target. And this number is in pips. So 50.1 pips is our stop loss distance and our target distance. And this other label up here is our profit target being hit by this candle, and it's showing how many pips were gained. So in this case, we have a plus symbol. Plus 50.1 pips means we won 50.1 pips on this particular setup. If I hover my mouse over that label, it'll tell me how many bars I was involved in that trade for, what my MAE was, which is my max adverse excursion, which is jargon for how far against me this position went before it hit my target. So in this case, it only went 3 pips against me. So if I hover my mouse over there, you can see it says MAE 2.89. So this trade went against my entry price by 2.89 pips, which is 5.7% of my stop loss distance. So this is a handy metric to track in your backtesting. So you can just understand your pain point of your trades. And of course, this is just an average and it's not perfect because it doesn't take into consideration spread, liquidity, market volatility. So if there was a news announcement around this time and the spread went wild, the script cannot account for that. So keep that in mind. These numbers are just guides. They're not accurate representations of how the script performs. But I just included this information because I thought it might be interesting. It's definitely helpful in your backtesting process. When you're backtesting manually, obviously I have a strategy version of this script that will automatically backtest the settings you have set up for you. But I always encourage traders to manually backtest your scripts. Only use this information and the strategy script information as a guide. So for example, if I reset the chart here, up here we have a 55.89% win rate on this currency pair of Euro New Zealand dollar with the default settings of the ultimate pullback indicator. That's a pretty good win rate considering I'm just using the default settings and they haven't been optimized for this pair. So what I would do is, knowing that this has a good win rate, I would go back and backtest this pair manually to confirm that it performed as well as the script is telling me it did. So for example, there are going to be certain trades you wouldn't be able to take because you might be asleep. So you want to filter those trades out in your manual backtesting process. And if the script is still profitable after you do that, then you have a winning strategy and you can go out and trade it with live money. I would recommend trading demo account first, obviously. And I'm not a financial advisor, so I can't tell you what to trade. But this is a tool that you can use in your own backtesting process to develop confidence in the strategy and fine-tune it to your own personal risk tolerance and your own personal personality and trading psychology, and go out there in the markets and extract profits using this script. This is intended as a tool. You're not supposed to trade these signals blindly. I don't do that, so you definitely shouldn't either. But it can definitely speed up your backtesting process and give you, if you're a beginner trader or you're not yet consistently profitable, this can dramatically speed up that process of becoming consistently profitable. And if you are already consistently profitable, then you know the drill and you know how to use this properly, and you should get a lot of value out of it. That's it for the rundown of the sort of visual elements of the script. And if I go back a bit, you can see that these labels do not draw across the whole chart. The reason for that is that there's a limit on how far back these labels can draw. But if you're backtesting this script, I put on the replay tool anywhere here, the labels will still show up, as you can see here. So as I cycle through the chart, the labels will continue to appear, which can help speed up the backtesting process. So it's important that you use the replay tool when you're backtesting the script if you want these stop loss size and profit target size labels to draw onto your chart. But that's it for the rundown of the visual element of the script. Let's get into the settings, and I'll run you through each of the settings that you see on this settings menu. So first of all, we have these little title labels. So unfortunately, TradingView does not allow you to really sort of drill down and maximize the customizability of your settings menu. There was no way for me to add labels and sections to all of these settings to separate them from each other to make the settings menu a little easier to read. And so I used a little bit of creativity here, and I just created a bunch of checkboxes that contain a name or like a label that explains what this section of settings do. So these checkboxes do nothing. If you click them, they won't affect the script whatsoever. They're simply there for visual purposes, just to add some aesthetic organization to this settings menu. So I just thought I'd better mention that in case you're wondering what these are, because you can check them, but they do nothing. So anyway, moving on, our first setting is our EMA length number 1. So this is our main EMA in the background here. So I just changed that to 100, and the script is now updated. So we now have a longer EMA. If I wanted that to be shorter, I could set it to something like 20 EMA. And of course, this is a matter of preference. You can set this to whatever you want, but this will affect your win rate. So I encourage you to go through and change this to whatever your preference is and see how it affects your win rate, see if it improves it or sabotages it, and you can set that to whatever you want to. Next up, we have our EMA length number 2. So this setting, it's set to 0 by default, which means it's disabled. But if I set this to something like, let's say 100, then we'll get another second EMA plotting to our chart, which is our 100 EMA that I just added. So if I set this back to 0, I'll show you what this does. Notice that we have this short setup here. If I come up and add in our 100 EMA, our second EMA, notice that our 50 EMA is above our 100 EMA. So this setup here was invalidated. So this second EMA is used as like a second market filter. And you can actually see this did increase our win rate by just slightly. So we now have a 56% win rate. If I set this back to 0 and disable it, you can see our win rate dips a little bit, but we get more trades, more trading opportunities. So again, this is for you to customize according to your own preferences. But I did get a request from a premium subscriber to the script to add that setting. So I did. But by default, it's disabled because I personally don't use it in my own trading. But if you want to, go ahead and try it. See what you can come up with. See if you can optimize whatever currency pairs or markets you're trying to trade to see if it improves your win rate or reduces your drawdown. So next up, we have our max candles beyond EMA. So the easiest way to explain this setting is to just show you how it works. So here we have a trade where we have one candle closing below this 50 EMA, but we still got a valid long setup. This setup ended up being stopped out. And so say you wanted to test the script to see how it would perform if you did not take this particular setup where we had one candle close below the EMA. So for my personal trading strategy rules, I'm allowed to have one candle close below the EMA, and then a bullish engulfing candle is still considered a valid long entry as long as we only have one candle closing below the EMA on this pullback. That's what I found worked best according to the way that I personally trade this strategy. But if you wanted to test your own variation of this and see how it performs without it, you can change this max candle beyond EMA to whatever you wanted to. So if you wanted to allow 2 or 3 candles to be below the EMA before your signal is invalidated, you could increase this number. And if you wanted to make it so that no candles can close below the EMA, just change this to 0. So if I hit 0, click OK, this signal will disappear, as you see there. And so our other signals are still plotting, but because we had more than 0 candles close below this 50 EMA, this setting has invalidated that particular setup. And obviously it works the same for the short side. So if you're below the EMA and you have one candle closing above it, that will invalidate your short signal. So that's what that setting does. Next up, we have our Lookbacks setting section. So the lookback for swing highs and lows is for detecting fractal swing low patterns. So notice that this candle here is not exactly a swing low, because if I draw this out, we had this trending move up here, and we had this high here, which is also the low, and then we had this trend continuation move here. So this swing low bullish engulfing candle pullback is not technically valid according to my personal strategy rules, because it's not the swing low of this pullback. So the script isn't 100% accurate according to how I personally trade it, but I had to make some compromises because obviously a script is nowhere near as good at interpreting price action nuances. And so I have a look back setting here of 5. So this script is looking back 5 candles for swing lows. And if the current candle is the lowest candle over that 5-bar look back, then the signal is considered valid. But if you wanted to extend this, say we wanted to include this candle back here, notice that that's 8 bars back. So if we were to change this look back for swing high and lows to 10, it will invalidate this setup here because it is no longer the low of the pullback, as you can see there. If I zoom out, we're still detecting plenty of signals, but any signal that is not the lowest candle over the past 10 bars is now invalidated. And if we reset the chart, we can see how that affected our win rate. And that actually increased our win rate slightly, but we got far less trades. So that's something to consider in your own trading. And so let me come back up here and change this back to 5. And this signal will come back, or this one up here. There we go. And let's move on to the next look back setting, which is our EMA breach. So remember this setup in here where we have one candle closing below the EMA. If I turn this back to allow one candle to close below it, changing this EMA breach look back will change how far back the script searches for candles that breach the EMA. So on this current candle, if I measure out 5 bars, the script is looking back 5 bars and counting all of the bars within those 5 bars that close below the EMA. And any bars that close below that EMA within that look back period are added together to give us our max candles beyond EMA value. So for example, here we have a short signal that occurs below the EMA. If I measure out to, let's say, this bar here, that's 6 bars back. If I change my look back for EMA breach to 6 bars, that will invalidate this particular setup here, because now 6 bars back, we had a candle close above our EMA. So that's what that setting does. And by default, it's set to 5 because I found that to be the optimal look back for this particular filter. So let's turn that back to the default settings. So that's it for our EMA settings and our look back settings. Let's move on to our stops and targets. And for this example, I'll just stay on this setup here. Our stop loss multiplier is a multiplier of the ATR. So by default, we have a 1 ATR stop loss from the closing price to the swing high. So the script is measuring the distance between the closing price of our entry candle, our setup candle, to the swing high preceding it, and then adding 1 ATR to that distance. And that gives us our 34.57 pip stop loss. If I were to change this to 2, for example, that will give me a 2 ATR stop loss, and you'll notice our ATR widens a bit there. So again, this is set to my personal preference, which is a 1 ATR stop. But if you prefer to give your trades a little bit more breathing room, or even a little bit less, you can set this to less. So 0.5 will give us a much tighter stop loss. We now have a 24.18 pip stop loss on this particular trade. So this is where you will optimize your stops and targets to your own preference. So if you're trading lower time frames, for example, you might want a wider stop. And if you're trading higher time frames, like a 4-hour or daily chart, you might want to shrink that stop loss size a little bit. This setting here will allow you to do that. Next up, we have our risk reward profile. So by default, this is set to 1-to-1. So our target distance is identical to our stop loss distance. But if I set this to a 2-to-1 risk reward, you'll notice our target extends, but our stop loss doesn't. So now we have a 48.37 pip target. If I hover my mouse over that label, you can see that our risk reward is now 2. So we have a 1 ATR, a 0.5 ATR stop loss distance from our entry candle and a 2-to-1 target from our entry. Pretty self-explanatory. Next up, we have our break-even distance. So depending on how you trade, if you trade a single target and you like to move your stop loss to break even after price reaches a certain distance from your entry towards your target, you can use this setting here. So by default, it's set to 0, so it's disabled by default. But if I set this to 1, then this will draw a blue line at a 1-to-1 from my entry point, which puts it right here. So you can see here that my break-even point is a 1-to-1 from my entry point, which puts it right here. And then this candle here actually tapped my break-even point. And because the wick of this candle also exceeds the entry point, the script has stopped me up for break-even on this same candle. So it's assuming that this candle came down, hit my break-even point, then retraced to stop me out for break-even on the same candle. So it's impossible to know without going down to a lower time frame exactly what order this candle moved in, whether it hit my break-even point before or after this large wick to the upside. But to be safe, I decided to make the script assume that if the same candle that hits your break-even point also exceeds your entry point, then it stops you out for break-even and just assumes that it happened in that order. So now if I were to come up here and change my stop loss multiplier back to a 1-to-1 and leave my risk reward as a 2-to-1, this is where things will get a little more interesting. Now this candle still hit my 1-to-1 break-even point. So let me extend it just a little bit. Let's set it to a 1.5 break-even point. And that will move this down a little further. There we have it. So what happened here is our break-even point was hit on this candle here. And then before price retraced to stop us out for break-even, our profit target was hit. So I hope that made sense. If it didn't, just rewatch this section of the video. I'm sure it'll make sense. So the next setting we have here is our pullback origin reference and minimum risk reward to pullback origin. So the script detects our pullback origin as the lowest point below this 50 EMA. So on a closing price basis, this right here is our pullback origin. And on a wick basis, this down here is our pullback origin. Now I got a request from a premium indicator subscriber to include a filter that removes any setups that do not meet a minimum risk reward profile to the pullback origin. So let me show you what that means here. By default, this is set to 0, so it's disabled. But if I set this to 1, then this setup here will disappear because our risk reward profile to the pullback origin, which by default is set to the closing price, is not greater than 1-to-1. So if I come up here and I change our pullback origin reference to wick, it still won't show up because the risk reward from our stop loss distance down to this wick is less than a 1-to-1. But if I change our stop loss multiplier to 0.5R, you can see that this setup does show up again. The reason for that is that we have changed our pullback origin reference to the wick of this candle, and we've changed our stop loss multiplier to a half ATR, which has shrunk our stop loss a little bit, which has given us a greater than 1-to-1 risk reward to this pullback origin. So that's what these settings do. Now, I know this might be a little bit confusing, but if you rewatch this section of the video, this whole stops and targets section a couple of times, I'm sure it'll make sense. And if it doesn't, just shoot me an email and I'll do my best to explain it to you. But that's it for stops and targets. Pretty self-explanatory, hopefully, if you're an experienced trader. If you're not an experienced trader, then this script may not be for you. I did design this script for consistently profitable traders and experienced traders. So if you're not an experienced trader and all of this is going over your head, then there's a good chance that you're not ready for this script. Make sure you go out, take the time to learn how to trade properly, and then come back and check this script out later. And this will all make perfect sense to you. So let me disable these settings, set everything back to the default, and we'll move on to candle patterns. So I've included a bunch of common candlestick pattern setups here. By default, we're only detecting engulfing candles. That's what I personally trade pullbacks using. And these are swing high and swing low engulfing candles. So it's not just any engulfing candle you see on your chart. For a bearish engulfing candle, price must first be below the EMA and it must be a swing high. So either the actual engulfing candle itself must be a swing high or the candle preceding it must be the swing high of the pullback. So there are a couple of settings here. First of all, we have engulfing candle must engulf wick. If I turn that on, this setup will be invalidated because the closing price of this engulfing candle is not below the wick of the candle preceding it. If I turn that off, it comes back. Next, we have detect hammers and shooting stars. So if I turn that on, we'll be detecting even more candlestick patterns on our chart. So for example, right here, we are now detecting this little hammer candle in here. So we can also detect swing low and swing high doji candles. So any candle that has a small body comparative to its wicks will be considered a valid bullish or bearish doji. So if I turn off engulfing candles and hammers and shooting stars, you can have a quick look through here. Here's a valid swing low bullish doji candle. And then we can tick here that the doji can be bullish and bearish. So if we turn that on, it doesn't matter what color the doji is, it can still be considered a doji. So this candle, for example, closed green, and it's a short setup, but because it is a doji and it's a swing high, it was considered a valid doji setup. And of course, down here under candle settings, you can change the max size of your dojis and a few other settings here, which I'll go over in a second. But before I continue, we can also detect fractal color change candles. So if I turn that on, you'll notice that any candle that is a swing high that changes color against the pullback. So in this case, we have a market making lower highs, lower lows. And then on this pullback here, we had a swing high color change candle. So this candle is the swing high of the pullback and it changed to red. So that's considered a valid fractal color change candle. So these are pretty self-explanatory. You should play around with these, see which ones you like the best. And of course, once you do find a candlestick pattern you like to trade, you can adjust the candle settings here. But before I continue, while I was making this video, I added one more option to this candle patterns section, and that is this must touch EMA setting. So if you turn this on, any candlestick pattern that you're detecting will be invalidated unless it tested the actual EMA. So it has to, the wick has to touch the EMA before the candlestick pattern is considered valid if you enable that setting. So they've got a little tag in front of these settings. EC stands for engulfing candle settings. SS stands for shooting star and hammers. DJ stands for doji. So the first setting here is engulfing candle max candle size to detect. By default, this is disabled. But if I set this to, let's say 1, for example, it's going to remove any engulfing candle that is larger than 1 ATR. So 1 is a bit extreme. You might not want to set it to 1. But if you're finding that the script is detecting massive engulfing candles and you don't want it to do that, you can set this to 2 or even 3. And any candle that exceeds 3 times the ATR in size will be invalidated. And this only applies to engulfing candles at the moment. So I'll set that back to 0 to disable it. Next up, we have our max rejection wick size, which is a multiplier of the candle body. So this candle here, for example, notice that it has a long tail wick to the bottom, rejection wick. Depending on your backtesting results, you might find that these setups lose more often than they win, and you might want to stop the script from detecting them. Now, the reason I included these settings is because not all currency pairs behave the same, and some currency pairs perform quite well with this candlestick pattern, and some do not. So if you wanted to test how the strategy will perform without large rejection wicks, you can use this setting here. So if I set this to 1, it will disable any engulfing candles that have a rejection wick, in this case of this bearish engulfing candle, a bottom wick that is greater than 1 times the body. So if I change that to 2, this should still be invalidated because this wick does look 2 times the size of the body. But now if I change it to 3, this setup should come back because the bottom wick is not 3 times the size of the body. So that's what this setting does here. Let's disable it for now. Next up, we have shooting star minimum wick size times the body. So if I turn off engulfing candles and I turn on hammers and shooting stars, and then we go and find a shooting star or a hammer. Here's a hammer candle. Now, if I change our shooting star minimum wick size times the body, by default it's set to 1.5. So the wick to the bottom of this hammer candle must be at least 1.5 times the size of the body. If I change this to say 3, so it has to be 3 times the candle body, this setup might actually still stay active, and it does. So the wick here is 3 times the size of the body. But if I change this to 4, then this setup will be invalidated because the bottom wick here is not 4 times the size of the body. So that's how you can customize the types of hammer candles and shooting star candles that the script is detecting. So if I set that back to 1.5 and we move on to the max opposite wick size divided by the body. So now let's find a different example here. All right, so here we have a hammer candle that looks a little bit iffy. See how it has this large wick to the top here that is almost the same size as the body, and this short little wick to the bottom. Now, this happened to be a pretty big winning trade, but let's ignore that for a second. And let's bring up the settings menu. Some of you traders out there might not consider this a hammer candle, and so you can play around with this max opposite wick size setting to invalidate these sort of setups. So if I set this to 2, that will invalidate that setup. If I set this to 0.5, then this setup will become valid, as you can see there. So that's what that does. And then of course we have our doji size in pips. So if I turn dojis back on and we zoom out a bit and try and find one here. Here's a swing high doji. If I bring up my settings menu again, come down to doji size in pips. If we change this to say 0.1 pips, that will disable this doji candle here because the candle's body size here is larger than 0.1 pips. And if you wanted to detect larger dojis, you could set this to like 3 pips, for example. And then we're going to get a few more doji candles detected on our chart that are slightly larger. And then we have our max doji wick size, which is a multiplier of the other wick. So if you wanted only to detect dojis that have a 1-to-1 wick size, you could set this to 1. And then this doji candle here will go away and be invalidated because the bottom wick here is not at least the same size as the top wick. And that's about it for our candle pattern settings. So I encourage you to come here and play around with these settings to see what suits you, and of course, to see what improves your win rate. In this case, the settings we have are not detecting any doji patterns. But if I turn on, let's just detect hammers and shooting stars. You can see we have a 50.62% win rate. If you play around with things like your minimum wick size and max opposite wick size divided by the body, you can adjust your win rate and trade frequency here. So that's it for our candlestick patterns. Let's move on to our exit settings. So all of these settings are used to adjust your exit reasons. So we have our RSI length, which is set to 7 by default for this particular indicator, and our RSI overbought and oversold levels. So these are used for our RSI exit reasons, and I'll go over those in a second. Next up, we have the ATR trailing stop size, which is a multiplier of the ATR. So by default, if you use this ATR trailing stop, it will be set to a 1 ATR distance below the most recent swing low or swing high. Let me come up here and turn this setting off, and you'll be able to see what this ATR trailing stop does. So notice that we entered this trade here, and then as soon as our target was hit, our stop loss began trailing 1 ATR below swing lows until eventually, it hasn't been hit yet, it's still in this trade. So if you were trailing your stop loss here, you'd still be involved in this trade. Until price action comes down and hits this, you will not be stopped out. So if I change our ATR trailing stop size to 0.5, a half ATR, then we would have been stopped out somewhere along here, probably here. Yeah. So see that little X symbol beneath that? That means that your ATR trailing stop was stopped out here. So again, you can play around with these settings, see what suits you the best, and see what affects your win rate and your average risk reward. See here we have a 49% win rate and a 1.28 risk reward, roughly speaking. Obviously, again, it's not going to be 100% accurate because no backtesting process is, especially not automated, because it doesn't take into account spread and all of that, which I mentioned earlier. So use these numbers as just a rough guideline. So moving on, if I turn off our ATR trailing stop, set that back to default, let's have a look at RSI engulfing exit. So if I turn that on, what this is now looking for is an RSI engulfing candle exit. So what that is, if I throw the RSI on my chart really quickly, and I set it to the same settings as our indicator, it's a 7-period RSI, and it's looking for bearish engulfing candles. In the case of a long trade, what's happening here is our target was hit here, and then the script began searching for a bearish engulfing candle while the RSI was overbought, and then that's our exit reason. Now, the reason I included this exit reason is because quite often this signal will get you out at the very top of a rally, like it did right here. But sometimes you won't get an RSI engulfing candle, as we didn't get one here on this short setup, and this trade eventually was stopped out. And same with this trade here. There has been no bearish engulfing candle occurring after the RSI has gone overbought. And I need to change our RSI to 80 and 20, just like the ultimate pullback indicator is set to. And you can see that we did not get a bearish engulfing candle anywhere here while the RSI was above 80. So you could come up in here and adjust these settings. So you could set this to 70 and 30, for example, and then you will get an exit reason up here, just like that. And that will affect your win rate and your average risk reward. So that's what an RSI engulfing exit is. And I should mention here that you can enable multiple exit reasons. So for example, here we have trailing stop active as well as our RSI engulfing candle exit reason. So this trade was initiated short here, and our trailing stop kicked in and was stopped out for a profit on this candle. Then another setup was detected, and this setup was exited on a RSI engulfing candle exit. So if I turn those off, I'll show you next what the RSI exhaustion exit does. So if I turn that on, now whenever the RSI goes overbought and we get a red candle or a green candle in the case of a short trade, then the trade will be exited. So instead of waiting for an engulfing candle, it just waits for any bullish candle to print while the RSI is oversold in the case of a short trade, or any bearish candle to print while the RSI is overbought. Again, I need to change these back to 70 and 30, which is what we just changed the settings to in here. And yeah, you can see that it is exiting whenever a bearish candle is printed while the RSI is overbought. So that's what our RSI exits do. Let's move on to higher high, high close, lower low, lower close. If I turn that on, get rid of this RSI for now. What the script is looking for is once our target is hit, it begins searching for a lower low, lower close in the case of a bullish setup. So here, our target was hit by this candle here, and then the script waited for this candle, which prints a lower close than the previous low. That's our exit signal in this particular long trade. For short trades, it's a higher high, high close that the script is searching for, as you can see there. And so again, that will affect our win rate and our risk reward. So here you can see that actually increased our risk reward slightly. So we're getting a 1.12 risk reward and a 55% win rate, which is pretty good. It's not bad. It's nothing spectacular, but it's certainly an edge over the markets, and over 548 trades that would have produced a decent profit. So let's move on to the next exit reason, which is our high close, lower low, lower close times 2 exit. So if I turn that one off, because that will override this one, and I turn that one on, what it's looking for now is 2 high close or lower low, lower close candles in a row. So you can see here in this case, we didn't actually get 2 high close candles in a row until all the way over here. So we did not have 2 candles close higher than the previous high in a row until here. And here with our short trade, you can see it exited slightly later on this lower low, lower close after this lower low, lower close. So the reason I included this exit reason is that it just keeps you in the trade a little bit longer. And on certain currency pairs, certain time frames, that can be a good thing. In this particular case, on this particular pair, on this 1 hour time frame, it does not look like it would have served us. If you go and look at our win rate, well, there you go. We've got a 52% win rate and a 1.37 risk reward on average. So our risk reward has increased. Our win rate is still above 50%. And this very well may have produced more profit than us waiting for a single higher close, lower low, lower close exit. But it also, if I turn that back on, took less trades. So 460 trades here with this exit reason, 548 trades with our single high close, lower low, lower close exit. So again, I encourage you to be creative, play around with these. Remember, you can enable multiple exit reasons. So we could see how it performs with a ATR trailing stop, an RSI exhaustion exit, and a high close exit reason. And it slightly increases our risk reward from 1 to 1, which is the default risk reward. And our win rate is still about the same as it was with the default settings, which is no exit reason. So you can see there we have a 1 to 1 risk reward on average with a 55.89% win rate. When I enable our trailing stop, our exhaustion exit, and a high close exit, the win rate goes down just slightly, but our risk reward goes up a little bit, which is good. Anyway, let's move on to our next exit reason, which is the EMA breach exit. So if I turn that on, what this is waiting for is the first candle to close below the EMA. So in this particular case, we went long all the way down here, and our target was hit here. And so the way I would trade this personally is when my target was hit, I would move my stop loss to break even and just wait for this EMA breach exit reason. So as soon as a candle closes below this EMA, you'll get a signal saying to exit your trade. And again, you can stack this with other exit reasons. So we could, for example, have a RSI engulfing candle exit reason. Combined with this, let's set this back to 80 and 20. And if you don't get your RSI engulfing candle exit reason, as we did in here, the RSI did not go over 80 and then print a bearish engulfing candle, but our EMA breach exit did occur. So that's one way you can protect your trade by having multiple exit reasons. If we go over here, we can check our win rate. Our win rate is 50%, but our risk reward is improved a lot to pretty much 1.5 on average. So we've got nearly a 51% win rate over 418 trades with an average risk reward of 1.5. That's not bad. Not bad at all. So let's turn that off. And this final exit setting will use whichever exit reasons you've selected and also exit on your profit target. So this is intended to be used with wider targets. So for example, turn that off and come up here and let's set my risk reward to 3R. So I want 3 times my reward versus my 1 ATR stop loss. But I also want to protect my open profit by using a different exit reason. Well, I can come down here and let's initiate, let's say, a trailing stop with, we'll leave it as 1 to 1. So if my target does not get hit, but I go into profit on this trade, I want my trailing stop to trail. If I turn this exit reason plus target on, then my ATR trailing stop exit reason will be initiated as well as my profit target. So you can see here that the script was trailing my stop loss. And again, you need to manually trail your stop loss if you're going to use this setting. This does not automatically manage your trades for you. It's just a tool to help assist your trading process and analysis process. But this script is trailing the stop loss until our target is hit. In this case, the profit target was hit before the trailing stop was hit, and the trade was exited for a 3R win. So that's all of our exit reasons explained. Let's move on to our miscellaneous settings. These are quite simple. Some of them are just visual settings. We have our ATR length here, so you can change your ATR length if you want to. This is used for calculating stop loss size and profit target size. You can select this, so this will override. If you've got, for example here, we've got this 3R trade, and the profit target isn't hit till all the way up here. But if you wanted to plot any signals that occurred before this target was hit, you can hit that button there, turn that setting on, overwrite new stops and targets, and it will plot all signals on your chart, regardless of whether or not the target or stop loss has been hit. And so this can be useful for backtesting purposes. If you want to, for example, say you were asleep when this trade occurred, you'd still want to see the next trade that prints onto your chart. So that's why I included that setting. And if I turn that off, we move down here to draw extended stops and targets. This will draw your target and your stop loss across the entire screen until one of them is hit. So in this case, you can see that the stop loss and target was plotted until our target was hit. Here, our stop loss and target was drawn until our stop loss was hit, then it stops drawing, and then you get the idea. So again, that's quite useful for backtesting purposes. Next, we have draw stop loss size. So if I turn that off, then these little labels here will go away. And that's just one way to tidy up your chart if you don't use that information. Next, we also have our draw P&L labels. So if I turn that off, these labels that show our profit and our loss will go away. So if you're not a fan of those labels and you want to declutter your chart, you can come down here and turn these settings on or off as you please. So I'll turn that back on. Next, we have our draw in trade flag. So if I turn that on, what this is doing is it's going to draw these little colored symbols down the bottom of the chart for long trades and at the top of the chart for short trades. In this particular case, green means we're involved in the trade. And if it ends with a red symbol, that means it was stopped out for a loss. If it ends in a green symbol, that means it was stopped out for a profit. And if you have an exit reason enabled, so if I come down here and I change my risk reward back to 1-to-1 and I turn on my RSI engulfing candle exit, some of these flags will plot purple, which means the script is searching for an exit reason. Here, for example, in this case, we initiated a long trade and then we were in the trade for 1 bar before our target was hit, our 1-to-1 target, which triggered the search for our exit reason. And so now the script is plotting purple flags at the bottom of the chart until an exit reason is detected. And in this case, the trade was stopped out for a profit, which is what this little green flag means. So this is great for backtesting again, or for just monitoring your trades at a glance. So you can see up here, this trade was looking for an exit reason for a long time, never got one, and was stopped out for a loss, hence the red flag. Whereas this one was searching for an exit reason for a long time and eventually exited the trade for a profit, hence the green flag down here. So that's what our draw in trade flag does. Next, we have draw trade stats. So that's this guy here. So if I turn that off, this little flag here will go away, as you can see there. So if you don't use that information, you just turn that off and declutter your chart a little bit. Next up, we have use EAP stop loss algorithm. So this is a setting designed for students of my trading mentor Stephen Hart's email analysis program, which is a trading course where he teaches you his personal strategies. This course is what taught me this pullback strategy that this indicator is based on. And in his strategy, he has a stop loss algorithm where he will shrink his stop loss based on a stop loss bracket. So for example, if your stop loss is between 30 and 50 pips, then your stop loss will be shrunk down to 30. So if I turn this EAP stop loss algorithm on, you'll see that my stop loss there shrunk a little bit because it's shrinking the stop loss slightly based on that stop loss bracket. So if we go out to a 4-hour time frame, that'll be a little bit more apparent. So if I turn this off, We come and look at this one here. Notice this is quite a large stop loss there. If I turn that off, it'll be even larger. So instead of an 180 pip stop loss, if you turn this EAP stop loss algorithm on, it will shrink the stop loss by several pips, which adds up over the long term. So that's what that does. If you're not a paying subscriber for this script and you're not a student of Stephen Hart's EAP program, then I'd encourage you to stay away from this setting. And for traders who pay for access to this script, you get a video lesson explaining exactly in detail what this setting here does. So let's move on to our final settings, which is our alert settings. So if I want to get an alert sent to me whenever price action touches the EMA, I can turn that on. And then when I come up here and set an alert and I select the UPI script, whenever price action comes down and touches this EMA, I'll get an alert sent to my phone. And that's a feature that was requested by one of the paying subscribers to this indicator. Next up, we have our trailing stop alert. If I turn that on and we are using an ATR trailing stop, whenever this ATR trailing stop value changes and we need to adjust our trailing stop, you'll get an alert sent to your phone for that as well. So most of these alerts are for trade management purposes. Next, we have our exit alerts. If you turn that on and you have any of these exit reasons triggered, so for example, an RSI exhaustion exit, then whenever you get an exit reason plotted to your chart, such as in this case here, you'll get an alert sent to your phone to exit that trade. And then finally, we have our long alerts and short alerts. This was another request from a paying subscriber who uses this script on a trading bot using a third-party API. So he can send only short alerts to that bot or only long alerts. By default, only these two are enabled. If you want to get other alerts, you need to come down the bottom of the settings menu here and turn these on. And so just finally, to wrap this video up, let me quickly show you an example of how to set an alert for this script. So if you want to detect long and short signals for this script, the way I set it up is I, first of all, select the UPI script as a condition. You don't need to touch this second thing, just leave it as UPI alert. Then I like to set it to once per bar close on higher time frames, so a 1 hour chart or a 4 hour chart or higher. I want this alert to only trigger whenever the signal is confirmed and the candle closes as a valid setup. But if I'm trading, say, a 5-minute chart, I might set it to once per minute or once per bar, and this will trigger an alert even if the setup isn't confirmed. So if the candle hasn't closed yet, but it is setting up as a bullish engulfing candle or a bearish engulfing candle or whatever entry reason you have set up in your settings menu, you'll get an alert sent to your phone before the signal is confirmed. And that just gives you an early warning that you may have a setup occurring soon. And obviously that is important on a lower time frame because you need to be quick to enter the trade if it does close valid. But on these higher time frames, it gets quite annoying having alerts trigger every time a potential signal is plotted. So I like to leave it on once per bar close for 1 hour and 4 hour and above. Once you've set that up, all of these are just a matter of preference. You can notify push notifications on the TradingView app. You can show pop-ups onto your chart. You can send yourself an email. You can use webhooks. So this is quite advanced. If you don't know what this is, don't worry about it. You don't need to know. But if you do know what this is, you can use webhooks to trigger alerts to third-party APIs. So for example, you could send an alert to a Slack group using this indicator, using the webhook alert action. But I'm not going to go into that in this video because it's quite advanced. But moving on, we have more actions. This is for playing sounds or sending email to SMS. Then we have our message, which is what you'll see as your text message in the alert. So in this case, you'll get a text message or email or push notification that says UPI alert 4, and then this little ticker code will be replaced with whatever market you've set this alert on. So in this case, that would be Euro, New Zealand dollar. And then last but not least, I should go over what all of these plots do. So the very first number on our screen is our long trade flag. So you can ignore this one. The second number is our short trade flag. So you can ignore these two. The third number here is our EMA value. The second number there is our second EMA. So if I were to turn on another EMA here, we now have 2 EMA values drawing. These next two numbers are just our long and short plots. So when we have a long signal, such as we do here, this will be set to 1. So you can ignore this number. This is our short signal plotting. So if I hover my mouse over this candle, see we've got a short setup here. That's what this 1 is for. You can ignore this as well. These next two numbers are for our exit signals. So if I go back to our long trades here and I hover my mouse over this candle, which has an exit reason being plotted above it, you can see this is plotting a 1. So you can ignore this number. The next number on the indicator values list is short exit reasons. So that's this number here. So you can ignore both of these two. And then the last few numbers are, if I hover my mouse over this trade here, we have our break-even price. So this is the price of our break-even target. This is our stop loss price. And this is our target price. So these three are perhaps the most important values on this list if you want to reference them when you're placing an order. And then this final number is our break-even little plot line there. So if I hover my mouse over where this break-even flag is being drawn, you can see that that's our break-even price. And then finally, if you come up into the settings menu, you go to style and you scroll down to the bottom here, we have our stop loss size value. So if I turn that on and then I hover my mouse over this long setup here, you can see that we have one more number being plotted on the end of this indicator value list. This is our stop loss size in pips. So you can see here 20.81, it says 20.81 up here. Now I had to disable this by default. I had to turn it off in the settings menu because for some reason it was causing problems on a lot of people's charts. You can see on my chart here it's drawing fine, but for a few people who tested this script for me, this plotting to the chart caused issues. So I had to remove that by default. And this number is just for backtesting purposes, because if I go back far enough on my chart, you'll see that our stop loss size labels stop drawing because there is a maximum amount of labels that PineScript can draw onto your chart. One way to get these labels back is to use the replay tool. So you can just click anywhere back here and this will load the labels back onto your chart like so. But if you don't want to do that, then you can come up into the settings menu, turn this setting on, and then when you hover your mouse over any trading setup, such as this one, you'll have your stop loss size being drawn up here. So you can enter that into a spreadsheet when you're backtesting if you want to. And that's all of these values. Again, these three are your break-even point, your stop loss, and your target. They're the most important values on this indicator list, other than this one when you're backtesting, which is your stop loss size in pips. And finally, before I end this video, I just want to point out a couple of known bugs that I'm still working on fixing. The first one is that on these yen pairs, any currency pair that is a yen pair, if you get a profit target that exceeds 100 pips, then the label will round this down to 1, to a single digit. So if you see a large win like this, just times this number by 100. So in this case, this was a 141 pip win, not a 1.4 pip win. And I'll do my best to work out why this is happening and fix this. This is only occurring on the label itself. It's not actually occurring within the script. So our risk reward and our max adverse excursion are all accurate still. One other bug that I've noticed is that on some currency pairs, the total trades that the indicator takes is slightly different to the total trades the strategy backtester script takes. So you can see here we had 194 closed trades, and up here we have only 154, even though these two indicators are set to exactly the same settings. I'll try and get this fixed as soon as possible, but this is just another example of why you should go back and manually backtest whatever settings you have, because you can't rely on either of these scripts to be 100% accurate. But even if they're off by 20 trades or 30 trades, the win rate and profitability is still pretty good on this pair. I would still go back and manually backtest this pair with these settings, given the results we're getting on both of these scripts. Those are the two main bugs that I've noticed that I'm still working on fixing. The only other thing I should point out is that sometimes the script will not detect pullback setups that look valid to you, but the script is invalidating them because of one of the lookback settings. So for example, you may want to play around with this lookback for swing high and low if the script is missing a lot of valid pullbacks on whichever market you're trading it on. And just always make sure to double check your settings whenever the script is doing something a bit funky. But that's it. That's all I've noticed so far. The script is performing pretty well. I have backtested this on a couple of pairs now, and the statistics are pretty accurate. So it's a great way of ballparking how a market performs with this script. And remember, that's taking every single trade blindly, without any filters, without any discretion, any trend analysis, anything like that. So if you find a pair that has a green label on whatever settings you've set the script to, it's definitely worth your time to go over it and backtest it with whatever filters you like to employ in your trading. And that's it for this video. I hope you found this helpful. If you're using this indicator, if you're not using this indicator and you want to give it a try, head over to my website and you can sign up for a trial. I do have a link in the video description for that. Now, obviously, this is a paid script because I have invested a lot of time into this. We're talking multiple years of work and optimization. And I recently rewrote the entire script from scratch, which is why I'm releasing this video now, because there were a lot of improvements to the script, a lot of new features, and I hope you guys find it as useful in your own trading process as I have found it to be in mine. Best of luck with your trading. Remember to manage your risk. Remember to backtest this. I know it's boring, but it has to be done. Don't depend just on the strategy tester or the indicator statistics, or there is a chance you will be burned. But that's it for this video. I'll see you in the next one, guys. Take care.